Okay, and we are live. Thank you, everyone, for joining us. Big day for all my fellow Catholics out there. Pope Leo the 14th, pray for us. Uh, what a day. So today we're going to talk about a little bit of Bitcoin. Seems fitting. It's back over 100,000. This isn't really going to be a deep discussion on philosophies around Bitcoin or the pros and cons of kind of how to hold it. This is going to be specifically around some of the effects that it may have on a portfolio. So if you like this type of content, I talk about Bitcoins, stocks, bonds, markets, Catholic things. I'd love for you to, follow me wherever you're watching, X, Rumble, YouTube, whatever it may be. And so what we're going to do today, my name is Phil Francois. I'm the founder and a certified financial planning professional. And I have a firm called Financial Wealth Planning. And this discussion today is something that isn't specific to your one particular portfolio, right? So I got to put the caveat out there that, right, this isn't financial advice. It's purely education and why it might make sense potentially to add some Bitcoin to your portfolio, but also understand a lot of the risks that go along with it. So it's a lot of education around volatility and some of the effects that it may have on a portfolio to begin with. So without any further ado, we're kind of going to go into some of that. There's a couple of really good pieces done by BlackRock and Fidelity that have some nice pieces about this. So I kind of want to go through some of what they have for research and, see if that kind of resonates with you for, like I said, portfolio volatility and, returns and kind of what we can expect with that. So without any further ado, obviously the first thing is, what is Bitcoin? Again, this is not at all a deep Bitcoin discussion, right? Anybody that's probably watching this probably has some idea what it is, right? It's digital, right? People say it's digital gold, what have you, but it's the original largest, cryptocurrency, right? It's the OG, right? To me, it has a very large distinction between there's Bitcoin and there's all other cryptocurrencies. One being that it has a fixed supply, right? There's 21 million Bitcoin out there. It's decentralized. It's not owned by any government and things like that. And now, more recently, it's become something that you can hold in an investment portfolio through an exchange traded product. And there's a number of companies that hold that. And again, this is not a philosophical discussion of whether or not you should, self-custody the Bitcoin or you should have it in ETF or hold it, on some different kind of wallet or whatever, right? And it's also not really a philosophical discussion around sound money and all that. Those are all fantastic discussions. A lot of people are having them. I've had some of those discussions, and I want to talk more about that. So if you actually are interested in having some of those discussions, some of my thoughts on that, let me know. We'd love to do some more videos and streams about that. This is purely going to be related to volatility and how it relates within a portfolio. And you're going to obviously be using some of the investment products that are out there, right? So for some people, that takes away from some of the decentralized nature of Bitcoin. Nonetheless, there is some evidence to suggest that, hey, you should look at this from both a diversification standpoint, obviously excess returns in the past. Can that continue? We'll talk a little bit about some of that as we go. Okay, so this first piece we're going to look at here is from BlackRock, obviously. And if we look at obviously there's some of the key takeaways here. It's had tremendous performance over the last decade, also been incredibly volatile. And, so does that make sense to add to your portfolio? So if we look at this, again, past returns, not indicative of future results. But if we look at how it's done since it started, right, really they track this back for a 10-year period from 2014 to 2023. It's obviously missing a couple years on the front end and a couple more recent years. Gives you a pretty good gauge, though, of where it sits. So you can see why some people have said, well, hey, we should look into adding Bitcoin in our portfolio, because if you can see that the top returning asset class in most years in the past has been Bitcoin. Now, that's not to say that everyone should have it, right? There's a lot of risk involved, and namely these big volatility risks, right? So you see, not only is it the highest returning asset class in a lot of years, the years it's not, it's the lowest return asset class, right? It loses by a significant margin. And so you need some of those, of course, upside returns to exceed that. And so how does this play within there, right? You can see there's a little bit the SPX. That's, of course, the S&P 500. We've got gold in there. We've got various high yield bonds, aggregate bonds, emerging markets. There's different types of markets in here, right? And so you can see the different Bitcoin. If we look at cumulative returns, been off the chart. Annualized returns since this chart goes is 50% for Bitcoin compared to the S&P, which has been 12. So 12 is fantastic. Gold, shockingly, gold 5%. So this is actually a slight bump to maybe having a little bit of potential gold in your portfolio as well. Something really worth discussing. This year has been a tremendous year for gold, actually, and this doesn't even include 2025. So shout out to gold. May want to look at some of that potentially. And then, of course, we got various bonds and things in there. So if we look at, so again, this is the obviously from an investment thesis perspective, this is the classic, I used to call it a jelly bean chart. When we look at this is why we diversify. This is kind of the classic investment. We use this chart to say, hey, this is why we have different asset classes. This is the new version that says, well, hey, we should have different asset classes and maybe look at this new thing called Bitcoin potentially. But again, we got the downsides here. So if we see, this actually draws it out a little bit in terms of upsides and downsides. So the major drawdowns, 80+% in the past. Now we're actually going to look at a chart in the future that shows how that volatility is kind of coming down a little bit. And so why it might make a little more mass, sense for more mass adoption, potentially less volatility, but it has been through some doozies. 2021 was not that long ago, where we had 50 to 70% drawdowns on Bitcoin. Now, the forward 4-year return after those drawdowns previously had been incredibly stellar. So something to keep in mind. Will that continue? Nobody knows, right? This Bitcoin is incredibly volatile, but this volatility has been coming down. So if you've been worried about the swings of Bitcoin, as adoption has increased, more coins have been mined, more people are holding for longer and being more comfortable with it, the volatility has come down over time. Now, the flip side of that is that's likely going to mean that excess returns are going to also reduce over time as well. So it's trending to me much more akin to a what we'd consider more of a traditional equity asset class, in the sense of the volatility is coming down, which is also going to bring returns closer in line with equities. But will it be exactly the same? Probably not. They're different. Of course, they're different investment vehicles. But I just think it's interesting to look at how the volatility has kind of come down over time. And, obviously we can compare that to gold and whatnot. Now, the volatility actually, I think this is a fascinating chart, right? We think about the Bitcoin is incredibly volatile. If you compare it to some of the mega cap tech stocks, especially the last couple of years, it has gone very in line with NVIDIA, Facebook, and Tesla. So again, that's kind of an interesting play on this whole thing that we think about as this incredibly volatile piece of investment assets, and it has been, and it probably will continue to be, but it has, again, trended a little bit more in line recently with some mega core tech stocks. So something to keep in mind. This is kind of the end of of this BlackRock piece. There is another piece of Fidelity that has actually some really good charts as well. Again, just the big piece is volatility, very large. Returns have been very large. It doesn't make sense for you. You should talk to me about it. This is a very personalized decision for your situation. I'd love to have this discussion if you want to add it to your portfolio. Now, Bitcoin has been added. This Fidelity piece is actually really good because it talks about, again, very volatile asset, very speculative. Got to put that caveat out there. Not investment advice. Has Bitcoin enhanced returns? Well, obviously, if we look at it since it first came on the scene in 2010, it has incredibly enhanced returns, right? If you actually held it from 2010 until now, you've had unbelievably huge returns, 178% return. That's crazy. Now, again, the returns have come down as volatility's come down. If you look since 2018, since Bitcoin futures came out, then price and efficiency started to come in a little bit more into play. That average return has now dropped to about 30%. Still stellar from a return perspective. So you can see how the trend is coming down a little bit along with the volatility. Now, what Fidelity did is they looked and they said, now how do we analyze this? If we say, what if we put a certain percentage into a portfolio, they were using kind of the 60-40 mix. And how does that affect return? So they actually did 1% into Bitcoin, and they looked at, hey, if we pulled it from the stocks or the bonds or a little bit of both, and you can see how, the volatility was adjusted in this place. So replacing 5% of the stock portion or 2.5% for both the stocks contributed to a 17.8% portfolio volatility. So it does increase significantly the volatility along with the returns. Now, the other piece is, does it help with diversification? So again, they looked at this data, and when they look at it, there's a couple of things. I got this chart here, but Bitcoin, aside from being volatile, but we're also looking at correlation. Again, if we're looking at from a traditional asset class perspective, does it play a role in the stocks and the bonds? Bitcoin's correlation with stocks is measured at 0.53%. So if you think about correlation, if it's even one, that means they're directly tied. So if one asset's up 5%, the other one's up exactly 5%. That's a 1-to-1 exact correlation. -1 is a complete opposite. So if one's up, one's going to be down the same amount. Pretty easy there. So they're not inversely correlated, meaning if the stock market is up, that doesn't mean Bitcoin's down or vice versa. They do run in line with each other, but they are not 100% correlated. So you can see it's about 0.53 correlation with stocks. So that does add some diversification. And Bitcoin's about 0.26% correlated with bonds. So again, nice diversifier, really. Again, they're not inverse, but they're not exactly the same. So it does add some diversification. You can see that here with this chart. If we look at how it compares the rolling 3 years of Bitcoin, stocks, and bonds going along here, and how that changes the diversification on there and the correlation. I think this is an interesting chart here when this looks at the median returns where stocks were the worst performing quartile. How did everything else affect it? So if we look at this chart left to right, on the years where the stocks had their worst quartile, how did all the other asset classes go, right? So most years bonds were up or flat. This time period here was a weird time, right? If you remember 2020 to 2024, that was COVID. That was rates, markets going crazy, rates getting increased because we had to, fight inflation and all that. So of course, bonds got hammered during that course time. But gold also down. You can see actually somewhat correlated to stocks. I know that people think that there's a inverse correlation between bonds and stocks, and that's not always true. There actually is. You can see here some correlation to them. And then Bitcoin has a kind of a similar run in the sense of down similar. Actually, in this time frame from 2020 to 2024, actually not down quite as much as stocks were during this exact period. So they do run pretty similar, not exactly the same, but this is part of a diversified portfolio and how you can kind of position different assets to make sure you're kind of smoothing out the ride a little bit. Is it a good inflation hedge? I've talked about this in another video. Bitcoin to me is not necessarily a great inflation hedge, right? I mean, inflation has gone up and Bitcoin had gone down. I think inflation, if you're talking about compared to CPI, it hasn't necessarily been an inflation hedge per CPI, right? You can see this. To me, it seems like it's more an inflation hedge against monetary policy. So, and which does have some, correlation to CPI and whatnot, but CPI is going to be different than how much money is floating through the system. So I think it has a little more correlation to kind of Federal Reserve actions than the actual cost of eggs or whatever at the store. But nonetheless, you can see kind of the correlation between inflation and whatnot in the 60-40 portfolio here. And then I found this to be a really fascinating piece. So if we look at this last part here, for this analysis, Fidelity took 3 different portfolio types: the risk averse, which is the 40-60, the 60-40 classic stock to bond mix, and then the more riskier, which is 80% stocks, 20% bonds, and determine what is the return on Bitcoin each portfolio would be needed in order to justify the Bitcoin allocation at different sizes, right? While also simulating volatility, constant volatility in there. If we look at this, it says the study found that a traditional 60-40 investor would need Bitcoin to return 19.2% in average real returns to justify allocating 3% of their portfolio to Bitcoin. Less risk-averse investors, meaning someone that's willing to take on more stock risk and be 80-20, would need to still get 12.5% average real returns to justify that same 3%. And then, of course, the risk-averse would need to get 31%. So again, that's being compensated for the risk that you're willing to take on, right? Because, and that's incorporating volatility and everything in there. So if something's going to be more volatile and more risky, you as a risk-averse investor would need to have higher returns to justify taking on that additional risk, right? So if you've got a higher risk tolerance and you think that 12.5% seems like a really good deal, and you think that could be exceeded by Bitcoin, well, then that could make sense to add that to your portfolio. And that's just talking about 3%, which is probably, from an investment perspective, is somewhere in the range of what most asset managers would say. Whether it's 1% or 2 or 3 or what have you, somewhere in that range, if any, right? Some people are going to be at 0, some maybe 1, some maybe 2. This was talking about what would happen if it was 3. I think that's kind of an interesting number. It kind of puts that hurdle rate in there to what you would need to have to justify putting the 3% in there, because obviously we can back test all of these returns, and every 3 or 5 or 10-year rolling period you put for while Bitcoin's been around, it's helped enhance returns. In a 1-year time frame when Bitcoin's down, obviously that hurts. But if you use a rolling 3-year period, it's always enhanced returns. So we're not really talking about returns. This is, again, more is it helpful for diversification? Does the volatility inhibit your potential benefits within a portfolio? And so I find that to be rather fascinating. So again, Fidelity's sum up here. The research says Bitcoin, of course, has outperformed traditional asset classes at times in the past, but potential for extreme volatility. Now, of course, it's had potential to enhance the portfolio diversification through correlations. So again, it's not a one-to-one correlation, but it is somewhat correlated, but not highly correlated. So it does add some diversification. May have some effect on inflation hedge, which again, I think is somewhat more monetary policy than price of eggs. But again, there is some interplay there. We could discuss that in another video. That's more of a macroeconomic discussion, and people have different opinions on that. So is what it is. Anyway, that concludes this discussion on Bitcoin and markets. So as you can see, certainly some benefits to consider in adding Bitcoin. This is for education purposes only, not advice. If you would like specific guidance on if it makes sense to add it for you in your situation, please reach out. You can message me, you can go to our website, contact us and set up a call and see if it makes sense not only to get help with your portfolio, but see if Bitcoin would be a reasonable part of your portfolio. So I hope that helps. If anybody has any questions, feel free to fire away. I'm going to check the chat here, see if there's anything that kind of comes into play here. Whole goal is to be on for about 20 or 30 minutes. Looks like we're getting close to that 20-minute time frame. So, okay. Well, I hope that was helpful. Again, if you liked the video, or if you didn't, feel free to let me know. Let me know what I can do better on the video. Like this video, follow it, try to push it out. I want to do more of these videos, and both by liking and following, that helps me. And also, if you have any constructive criticism on, hey, if it was good or what you can improve or other topics you want me to talk about, let me know. I'm still getting the hang of this video and live thing, but I want to do more. So let me know what you think. All right, not seeing any chats coming through, and that's great. I appreciate everybody stopping by. Thank you for your time, and God bless.